What if I told you the RSI can show breakouts before price moves? It's not magic, it's a trick I'll show you in this video. In 2025, I've found a way to spot big moves before they happen, just by drawing the right trend lines on RSI. And I'll save the best tip for the end, so stick around. Why RSI trendlines matter. Most traders use RSI for overbought and oversold levels. But professionals? They use RSI trendlines to track internal strength and weakness before price reacts. It's a way to anticipate market movements before they become obvious on the chart. Put RSI and price side by side. Draw the same trend line on both. As we can see, the RSI trend line was broken earlier than the price trend line. This could have served as an early signal for us. Instead of recognizing the breakout here, we could have anticipated it earlier at this point. How to draw RSI trend lines correctly. One of the most common mistakes traders make is focusing only on price charts and drawing trend lines on price alone. But a powerful and often overlooked technique is drawing trend lines directly on the RSI indicator. Drawing trend lines on RSI works exactly like drawing them on price. For a downtrend line, you need at least two clear and major swing highs on the RSI that are aligned in a descending fashion. Connect these peaks and extend the line forward. For an uptrend line, you should find two clear and major swing lows on the RSI. Connect these troughs and project the trend line forward. Confirmation. After the RSI breaks its trend line up or down, you shouldn't jump into a trade immediately. Instead, you wait to see if the price chart confirms the RSI signal by moving in the same direction within the next 5 to 10 candles, depending on the time frame. If the RSI breaks an uptrend line, a bearish signal, and price starts dropping within 5 to 10 candles, that's your confirmation, and you can consider entering a short trade. If the RSI breaks a downtrend line, a bullish signal, and price starts climbing within 5 to 10 candles, that confirms the breakout and may signal a long opportunity. This flexible confirmation window helps filter out market noise and reduces the chance of acting on a false signal. Real market example, RSI breaks before price. Here's an example on gold, 1-hour chart. We start by drawing a trend line on the price, connecting two clear swing highs. Then we draw a similar trend line on the RSI. Now pay attention, RSI breaks its trend line before the price does. And what happens next? Within 5 candles, the price turns bullish, confirming the move. So, instead of waiting for the price to break its trend line in this area, then waiting for confirmation here, before entering the trade, we could have entered earlier, at a lower price, right around this zone. Final tip. The hidden power move. And here's the tip I promised. If the RSI breaks its trend line, and is diverging from price, that's your gold mine. When price is going up, but RSI is trending down, that's bearish divergence. But if RSI breaks above its own downtrend line, that's your early signal that momentum is coming back. The correction inside the uptrend might be over and price could be ready to push higher. Flip it. When price is falling but RSI is trending up, that's bullish divergence. If RSI breaks below its own uptrend line, that's your early signal of weakness. A warning that the bounce might be over and price could drop further. RSI breaking its trend line plus divergence equals early signal. You're reading the market before everyone else. If you found this helpful, make sure to like, subscribe, and share this with someone who trades RSI like it's still 2019. We're in 2025, and you're leveling up.